Good morning. Um, Today we're talking all things currency related. One of the things we like to see is, once we think we're in a setup, is then see it develop. And we're starting to see this in the dollar. So I'm going to go through a few things on that this morning. Starting off with the euro dollar, we know from earlier on in the week we had this big blue square, which is a range relativity extreme, and we had a divergence pattern on the same day. Pretty quiet until yesterday, where we extended lower. So this has broken our 119.80 point, which is the trigger for that range relativity extreme. So now we're interested in selling any bounces. So what customers do is they put on the range deviation pivots, which are fixed in value, and they look for moves up to the first and second level. So 119.22 and 119.61. I'm going to show you the dollar index as well. Just going to explain a couple of things about supports and resistances, but also some traditional analysis. We're not averse to using tried and tested tools, even though most of what we do is unique. We also have a range relativity extreme in the dollar index, and we have this major monthly level at 92.34. And yesterday we managed to close above it, not by a great deal, and now we're not really doing very much overnight. I'm going to quickly explain what a range relativity signal is. It looks a bit of a mess, which is why we code it up, so that it just produces squares when the pattern is true. What we have is range deviation levels on multiple time frames. So red is annual, brown is semi-annual, pink is quarterly, blue is monthly, and black is weekly. And what we're interested in is when the monthly and the weekly extend beyond the quarterly low or the semi-annual low, and if there's enough data, the annual low. And then the weekly, this one here, goes beyond the monthly. So that's the setup. And then if it snaps back the other way and closes above the weekly high target, then that's what's going to trigger that square. Obviously the opposite way around for the euro dollar. Using traditional analysis, just done a Fibonacci retracement on a weekly chart. I've taken that low, gone up to that high, and it looks like it ignored the 0.382. A lot of Fibonacci doesn't work, and you've got to qualify it whenever it gets to levels, which I'm going to explain. And then we just went a little bit below the 0.5, and then we snapped back. I've now moved this down to a daily chart, and this is what happened when it got to that 0.382. So I'm just going to draw a little circle around it. So we sort of went there, then we had one day where it bounced and then it broke through. The first time we hit the 0.5, we're in a bit of a panic mode, snaps back, we've gone back to it, gone a little bit below, and then reversed. Now how do you qualify whether it's going to work or whether it isn't? So what we use is the same principles of peak energy, peak expansion on intraday charts. I've already spoken about that in previous videos. And we have up to half day data, 360, 240, 120. Now this is what happened when it got to that 0.382. So the trend was definitely down. There was no support below. We bounced a little bit, but then we failed directly to the tick at that 360-minute level. Had what's called a slam dunk signal, which is an expansion of range, and we broke down. So the market never managed to stabilize and form any true support at that point. If I now move forward to today, this is when we hit the 0.5 a few days ago, and again there was no support. There never is going to be when it immediately gets there. The key thing that then happens is what was half day resistance moves to the bottom and underneath. So you can see that everything's suddenly underneath. Once we went above this minor 120-minute level in here, it opens up space. So there is no resistance in the short term. It sort of took a while for it to get going, and then obviously we accelerated yesterday afternoon. 92.90 is a key level, and 91.69 is a level below. What we want to really see next is some of these major levels start to move up in the coming days. It was also a big day on the pound. This is a daily chart of the spot, and what we've had there is two of the patterns that they use, which is UFO and the black square as a time continuation. We also closed below the third range deviation pivot down, which means that we have an expansion of range. Now, it wasn't at resistance, there is no resistance lines there, and one of the reasons for that is that there isn't volume on spot, so it means that the peak energy study is not valid. So on FX we also look at the futures, and what we see here is a daily level. So a daily level has been created. It's called PVOL on CQG, which stands for volume, and so it's gone up to that resistance point and failed. We have the Bank of England today, midday UK time, so we have to wait for that because we want to try and trade safely. There's a chance the trade can get away from you and the news comes out and it just collapses. But again, what traders are interested in is 132.42 above and 132.77. That trade would be wrong if we close above yesterday's high. Finally, just a quick update on gold. Had that weekly signal, daily, it's a daily chart, so we had a daily time continuation at weekly resistance. Gold actually performed pretty well yesterday morning, and the dollar was unchanged, but gold sort of had a bit of a bounce. As soon as the dollar rallied in the afternoon, gold came off. The low was pretty much was just 2 ticks below the third range deviation pivot down, so that's the normalized limit of range for the day. The focus very much 1307.2, which is a monthly level, which is also a weekly level, so we would expect at least some sort of stabilization if it gets down there. Okay, thank you.